And we're back on the Fowler Show. I'm quiet for a reason. Because you're going to hate the fact that I'm talking about this again. But I feel as though I have to. I don't want to. For the record, I do not want to talk about this issue again. I am tired of talking about it. I don't want to talk about it. But the members of Congress and the inaction here in Washington has forced me to talk about it again. Yup, I'm talking about the student loan debt crisis. And I'm happy. I'm very happy that our progressive friends and allies have decided to join us. Because before it was just about 7 or 8 of us talking about the issue, and now it's become a hot, sexy political topic. So I'm going to continue talking about it when it's not hot and sexy yet still. But for our new progressive friends who are talking about it now, thank you. We appreciate your support. The movement desperately needs it. You would be surprised who is making money off the student loan debt crisis. Let's start and tell you who's making. Let me give you some figures here. Commercial banks like Sallie Mae, a former government agency, now the nation's largest private student loan lender, continues to make enormous profits. In 2012, Sallie Mae made almost $1 billion when the only thing that they produce and sell is student loans. Profit. Don't be fooled, though. Don't be fooled. The Congressional Budget Office in February estimated the Department of Education will make about $35 billion in profit in 2013 from the student loan program. But that number has been revised to be $50 billion in profit, a 43% increase for this year. And, you know, it's sad to me that the federal government is making profit as students continue to struggle. As students continue to find hardships for jobs, find hardships for repayment options, our federal government is making money hand over fist. $50 billion worth of money. Which I get is a drop in the bucket compared to the largest student loan debt crisis. But yet still, should it not cause pause for those of you out there watching this, that the federal government and big banks continue to make tons and tons and tons and tons and tons of money, while the middle class and young people trying to be part of the middle class continue to suffer? And it caused pause for me because because I get it. The president said he switched from a private banking loan system to the Department of Education managing student loans in order to save money, in order to make it easier for students. I get that. I acknowledge it. I appreciate it. But Mr. President, what are we doing with that $50 billion worth of money? Why is that money not going back to student loan debt forgiveness? Where is this money going? Is a question that I ask myself. But. The president is not the worst, and the federal government is not the worst culprit here. An CFPB report indicated that private banks that lend out private loans, or people who have private student loans, they're making money even more so hand out of fist. And here is why. Because there are few affordable repayment options for private borrowers and for those who hold the direct federal loans. The income-based repayment program plan is only offered to people that have federal loans. So if you have a private loan, there's less options available for you to repay it. So the banks make more money in fees and late charges and deferment fees and processing fees. And if God forbid you go in default, then they're really raking in the cash because you can't get rid of this debt. So you end up paying them 4 or 5 times what it was really worth for you to go to college. And I say to myself, banks can borrow at 0.75% right now when they borrow from the Federal Reserve. When banks go under, America jumps to try to save them, right? With billions of dollars. No problem. It's okay. The American people will foot the bill. But when it comes to dealing with our young people, and when it comes to dealing with the student loan debt crisis, no sirree there, Bob. The American people can't foot the bill. This is about America's prosperity and about America's future. Why wasn't the conversation about America's future when we gave billions and billions and billions of dollars to America's big banks because they were too big to fail? I guess what they're trying to tell us as young people is that we are so small that we can fail, but the banks are too big so they can't fail. But to that I say, that's just straight up bull. And beyond the fact that it's bull, it's downright hypocritical. Because the reason why we have this too big to fail mentality is because Washington has continued to prop up this too big to fail mentality. And that too big to fail mentality is the same mentality that fills their campaign coffers with the money they need to run campaign ads and run their campaigns. So, big lobbyists give big money to big politicians and they reward them with the too big to fail label across their ass. While the students don't have that big money. They don't have those big lobbyists and they don't have an opportunity, so we don't get a big stamp on our ass that says too big to fail. We actually get slapped in the face and thrown under the bus by our very own congressman who we sent to Congress to represent us. And that is exactly what we saw this week from Republicans, who passed a measure to try to fix the doubling of the federal loans rates by pegging it. Hear me on this one. By pegging it to the United States Treasury. While for the initial part of it, it would keep our interest rates low, right? And when we go to the Treasury, we'd go to about, it would be close to 4.5% is what we'd end up paying if you're a student getting a new loan. But that loan would reset every single year. So if you don't get this, let me break it down for you. This is the policy breakdown, so I'll break it down. So you enter as a freshman at, I don't know, let's say Marymount University. And you get a Stafford loan that's worth $2,000. Your Stafford loan is worth $2,000, and it has an interest rate of 4%, right? Because you're pegged to the Treasury plus 2.5%, plus 2.5%. Now, the bill does cap it at 8.5%, so that's good to know. So there's a cap or there's a ceiling on how far your interest rate can go up. But the next year, say for example, we happen to be in a period of inflation. And when you're in a period of inflation, as you all know, the Federal Reserve, what they begin to do is they raise interest rates so they slow down the money supply. So when they decide to slow down the money supply, guess what happens? Your student loan interest rate then it changes. It resets every single year. I.e. meaning you can start college with an interest rate of 4% and you can leave college with an interest rate of 8.5%, meaning over the lifetime of your loan, we're talking about thousands and thousands, almost $36,000 per student. This is not the America I believe in. Now, the president's plan is someplace in the middle. The president's plan is also to tie interest rates to the 10-year Treasury bond, but they're not fixed. I mean, it's a fixed rate, so that once you lock in at one rate and you keep that rate for the entirety of the loans, the entire lifespan of the loan. Either way, neither of those policies solve our problems. We got to get away from this loan-based system to fund our education. If we really believe in the American dream and really believe in taking America into the 21st century and beyond, that requires that we invest in our greatest resources, our people, America. And the only way we can invest in our greatest resources is by trying to invest in our young people. And the only way we could do that is by finding a way to fix a student loan debt crisis. The Republicans don't have the answer. This whole ideal of prosperity and personal responsibility is absolute malarkey and garbage. Because if you told us young people that we wouldn't get a job if we went, the mantra that we've continued to hear is go to school, get good grades, go to college, get a job, and become part of the American dream. Now you're telling us that that mantra is not good enough. Now you're telling us that our loans aren't good enough. Now that you're telling us that now we're not only are we faced with the job market that was created by your policies on this Congress, and now you're telling us you're gonna give it to us one more time and throw us under the bus again by not trying to fix student loan policy in this country? Really though, John Boehner, is that your solution? Is that your solution? America, we deserve better, we demand better, we want better, but we've got to fight for better. This is our fight, millennials. Let's get to work.